If you're bearish, maybe that's your step one. Maybe you're bullish and this is a disqualifier for step 2 and 3. Either way, there are going to be a couple things you're going to see here that's going to tell you it's going to rain before you're wet. And the market has a probability to go down. Right now, you got a market rallied, pulls back, trying to rally again, but is going to show signs that it's weakening and it's going to go down. You're always looking for how can I be short at the top of a down bar? How can I be long at the bottom of an up bar? Those are always the definitions of a good location. So take a look at our chaser. It shows a slight buy imbalance 513 to 374. Okay. Also shows that the laser, what we refer to as a laser, is got more shorts than longs. I got to back it up just a couple beats here because right here shows 59 to 9. So a nice more shorts than longs and a 5 to 200 laser to say upside is right side. Now, that's fine. It's fine to be long, get long. But what's not fine is to take your eyes off the information that might have gotten you into a trade because it's often going to get you out of the trade. Hopefully, higher than you got long, but either way, it doesn't matter. All right. The market doesn't care about your individual trade, it cares about all the trades, an aggregate of all the trades, because that is the market. But personally, it doesn't care about where you got in and how many contracts you're long or short. And if you look at this, take a look at the chaser. It's showing a little bit of upside, number of shorts, but it already rallied a little bit. Now, the laser goes red to green right there. And then the chasers 5 to 374. This is what I mean about taking your eye off the ball. If you're bearish, you might wait for the chaser to flip and go balance to sell in balance, and it does right there. Now it looks like, oh, that's too quick. It went down. Not if you're looking for it. Not if you're looking for it up in here. You're actually anticipating this, seeing what you're anticipating, and then being able to kind of read the story as it's happening. And then you could see it doesn't just go down, a little bit from there, but it has follow through. Why? Because you're keeping your eye on the ball and you're seeing that the chaser is staying sell in balance. The change in anything at the beginning of a change is where it holds the most value, especially in trading, but anything. The moment something changes, going from, in this case, bullish to bearish, man, it's important to be on the C or the H in the word change. It's important to know it right as it happens and flips because it puts you in a position to either exit along so you're not dealing with this additional heat, disqualify a long if you're not in it, or qualify a short if you're bearish because you're looking to be at the top or near the top of a down bar. And so that's important. The changes in the market. Now, if we back this up, what did it look like when it bounced off the green PWAP, which would be a good target or support? 200 by 556. Play it, play it, play it. Boom. Couple ticks higher, it fills up, bids are showing up to maybe qualify that as a place to either get out or get long. And it does go up from there, right? It goes up from there before it goes down. That's important. There was other moments you could see it bounce off the red PWAP, off the green, and then right in here. Is there anything that could get you short for that? Short for that. Anything in real time. Because after it goes down here, it's like someone nudging you and say, hey, pal, I think it's going to rain. And the other guy is saying, thanks, asshole, but I'm already wet. Doesn't matter. So you got to put yourself in a position to tell the guy it's going to rain. And then he gets the stuff together, gets in the car, boom, it starts to pour. And he looks at you and says, hey, man, thanks. Good information. Do you have something that tells you it's going to rain before you're wet? Now, so you look at the chaser. It's 396, 438, essentially balanced. You look at the laser, longs versus short, pretty balanced. And we play it. And we play it. Boom. Some longs start coming in. Not a big deal. 344, 497 on the chaser. Ooh, 3 by 5 before it splashes. Let me back it up. Longs come in first, which is bearish. And then 397, 450. Watch those two numbers. There's a moment that it goes right there, shrinks to 317 and 505. Now, that's not terribly imbalanced, but longs came in. And if you speed it up right there, you could see it shrink really fast to under 200. Now, this one you might have missed. Some might have caught it because you're anticipating it, and you might have caught it not up here, maybe down in here. Either way, you're not catching it 3 points lower, or you're not sitting here saying, well, what happened? And then a buy imbalance comes in, and guess what? Too many damn longs sitting on this guy. This is probably going to breach, which means it's going to dive lower just based on what we're seeing. There's too many longs to have too big of a pop. Why? Because the market's not going to satisfy everybody and pay everybody when there's more longs than shorts. Take a look at the top of this bar before it breaks. First thing is you're anticipating that it might breach this buy imbalance. There's too many longs. 414 by 595. You let it play out. You're watching it. You're like, you know what? If you're bearish, if they take out that big bid at 44 quarter right here, it's over with. Take a look at the chaser. Take a look at the chaser right there, 200 by 628. Now, you don't have to get short, but if you're long, someone's got to crack you around a little bit. Say, what are you looking at? You didn't see it? You didn't see those 44 quarters get taken out and longs were leaning on that, and now they got to chase? You didn't see this prior blue triangle be a buy imbalance that if it gets below it, longs are in trouble? You don't even know what it means to have too many longs being bearish because too many longs equal too many sellers? You have no business touching the mouse. So this isn't a surprise when I play it. Boom. That's not a surprise. That doesn't feel like a guess, does it? That doesn't feel like you got lucky. But again, are you watching the right tools that actually give you relevant information? I said this earlier, and I'll say it again. An edge or advantage in the tools you have are giving you information before most of the rest of the world. And when most of the rest of the world finds it out, they're like, holy shit, let's do this or let's do that. Then you know it's good information. Now, if you got information and tools that when the rest of the world finds out about it, they're like, okay, great. What am I going to do with that? It ain't good information, is it? It's not an advantage. You're not going to do anything with that information if when everybody else finds out about it, they're uninterested in it. You're breaking stories people don't give a shit about. So it goes back to, do you have a little bit of a head start on information that when most of the rest of the world finds out about it, boom, they're going to react? Could be news. I always use that as an example just to make a point. Could be a Trump Truth Social post. If you had some contacts in the White House and they gave you a nudge and said, that's not coming from Trump, but the White House is going to issue a statement that we're considering putting some levies on the exports to China for some soft, here's the language. Well, of course that would be an advantage. And I'm not claiming I know that. I don't, or anybody else that I know knows that. But somebody knows, I would imagine. That would be an edge, an advantage to know that that was coming down. The market reacted with a 20, 30 point sell off. Why? Because when most of the rest of the world did find out about that, they reacted to it. They were holy shit, and in this case, sold it. It'd be an economic number. I'm using these as examples of when you have information that gives you an advantage versus when you have information that everybody else sees. Well, what kind of edge is that? I'm using a 200-day exponential moving average. Great. So was little Johnny at age 12.